You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again to rock out with your old friends, the Option Block All-Stars. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Lots of shows, lots of programs, lots of fun for you guys to check out on the old network. Even when we're not talking Option Block fun, of course, we do that every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. You guys can grab the live link and join the live party in progress. So you have fun. No shows on Friday this week, so the Volviews fans and the Twifos fans, unfortunately, you're gonna miss out. I'll put some best ofs in the feed so you don't feel neglected completely. But unfortunately, the markets are closed. Can't do anything about that. But you get your full dose of Option Block this week, so be thankful. And of course, however you listen, live, after the fact, maybe on a ham radio in Uzbekistan, however you get the show, make sure you hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff. We do, yes we do, don't believe what other people say, we do like to hear from you folks out there. And joining me from way out there, let's see who we got. Let's spin the old Option Block All-Star wheel. Let's first, we landed to the hinterlands, the far coast of America, where ice rinks are really nothing more than dashed dreams, where we are joined by none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir. How go your dashed dreams?
Everything is melting. Mud season is here, but really winter's over when the guys pull their ice fishing huts off the ice. That's when you know it's really the season's
It must
over,
be sad times in Maine when you see that. It's kind of like here when the boats finally leave for the season around November, and winter's finally in Chicago. It's kind of like the opposite of that in Maine. Everyone celebrates winter in Maine, and when it's over, everyone's quite sad. Is that the case?
It is somewhat. There is still a lot of sadness in Maine in the winter time. There are some sad people because they're not accepting the fact that there is winter on a annual basis. But, what can you do? As you say, c'est la vie.
That is indeed what I say. You guys certainly got your share of winter, like four nor'easters in the span of four weeks there, or something crazy like that, or bomb cyclones, whatever the cool kids are calling them these days over there. You guys got a ton of them, so we kind of just laugh over here in Chicago. We don't get that sort of thing. No bomb cyclones over in Chi-Town, at least. Actually, 65 degrees in February. We'll take it. We're the new Miami of global warming here in Chi-Town. Also joining us, usually in Chi-Town today, in suburban adjacent to Chi-Town. Today, out there in the mobile office, we don't know where he is, out and about doing business. He is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, to you as well, sir.
Well, Mark, I got to confess to you, I'm really on a ham radio in Uzbekistan.
I knew that was you. I always see the numbers every month, and we get that one person coming in from Uzbekistan via ham radio. And I had a feeling it was you because you like to cling to old technology. And now I know. Now it is official. Well, I'm glad your ham radio setup is good there. Hopefully the time change is not too hard for you to deal with over there in Uzbekistan. Speaking of time, it is time for us to keep on rolling right on into our first segment. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, and this is part of the show, I should say, where we break down what's going on, what's rocking and rolling in today's activity. And let's just put a spoiler alert on it now. Uncle Mike's probably got a smile on his face, even in the mobile office, because the Bulls were in charge in force. You know, all that stuff we were talking about last week. We were worried about big sell-offs and worried about trade wars and fighting across the globe in terms of economic warfare going on there, all sorts of fun stuff, and all the things that had everyone really terrified and the market selling off aggressively and VIX spiking. Yeah, all that's done. In case you were wondering, most of the major indices up and up strong, up hard today. The NASDAQ actually leading the charge, up 3.25% today. Yeah, let's just let that sink in for a minute there. Just a size movement across the board. S&P up about 2.75% on the day. The Dow up right around 2.9% to end the day up there. So just size green on the screen everywhere you look. The Russell 2000, bit of a laggard. Excuse me, but then again, it was a laggard to the downside as well. So not so bad of a thing out there. Only up about a mere 2.2% out there today. And of course, all that green means VIX cash taking it on the chin today, shellacked, walloped, call it what you will, off four handles today out there in VIX cash land. So we were threatening in the mid-20s last week. We came in today, actually hit 24.5 VIX cash land intraday, settling out down near the lows, right around 20.8 or so out there. So shy of the 21 handle out there. So just a lot of just red out there. All of you folks out there who've been talking up the erosion game, probably pretty happy campers today with SVXY, even though it's neutered as it is. Still up, I should say, up nearly half a handle, about 0.4 up there at about 1183. And our old friend VXX taking a nice relaxing move to the downside, off about 3.3 handles or so, right around 46 and a half and change out in that realm. So some of you folks out there who like those trades, and I know there are a few of you, probably smiling all the way to the bank. People who were not smiling today, unfortunately, were the folks out there in the tech-heavy part of the marketplace with Tesla and Facebook just getting walloped. I think we'll get all that. We'll get into all that in a second. But first, let's welcome on my cohort, see what was catching their eye. Let's start in the mobile office today. It's kind of fun. Let's mix it up a little bit. So, Mr. Uncle Mike, sir, as you check out the fine environs of America here, what caught your eye in today's activity, sir?
Well, I mean, a 70-point update in the S&P. What's not to love about that if you're a bull? I think that the key thing of what's going on today is tariffs versus no tariffs, and I think this is one thing that we can all learn from this as students of the market. It's just the way with which our president seems to like to negotiate. And we've talked about this on the show before, and his book, The Art of the Deal, oftentimes he'll talk about whenever he's negotiating for something, he's trying to have the end point be win-win, to where the people on each side are happy at the end. But he always starts off with asking for more than what he really wants. And so I think this is another example of what he had done with the tariffs, and that he was asking and talking a lot more than what he actually wanted, because when this news came out a couple of weeks ago, there were supposed to be high tariffs everywhere, and then eventually, we'll exempt these countries. No, we're just going to do steel, and eventually it just pretty much was just China. And now, after he's talking about possibly not doing it now, or doing less, or be willing to negotiate, it seems like the markets liked that, as evidenced by, 70 points of S&P today seem to like that, and that's where we are. In terms of tech and Facebook, for example, I know that's a big story as to what's going on with the data, whether it's how it's held and how it's distributed and that type of thing. I don't really, yes, it's a big deal with what happened, but I'm not a tech person by any means, nor do I claim to be, but I don't put anything on Facebook that I wouldn't want advertised, or I try to not allow anything on Facebook that I wouldn't want advertised in the front page of USA Today. Oh wait, that's no one really reads the newspaper anymore. I don't put anything on Facebook that I don't want the whole world to see. So I would think that most people would kind of have that in mind when they do it. So with that, Facebook's really in the tank right now, and the market really doesn't like that. And it still did not share in this great rally today that the rest of the market had. So I think that that's something that needs to be noted in this time for Facebook. And yes, Zuckerberg apologized on all the front pages of the newspaper, but I still think that they may have some more rough times ahead. But I'm not a Facebook owner, so since I don't put my money where my mouth is, take that. That's free advice, and take that for what you paid for it, I guess. Apple had a big day today along with the rest of tech. And then the other thing that I'm noticing in these markets right now is that I don't think that the interest rates from last Wednesday really have that much of a factor on the markets. It seems like both sides of the media, both the liberal side and the conservative side, both seem to like what the new Fed chair had to say at his first press conference. So it seems like the Fed is not really controlling the market, at least not on purpose like they have in years past. So I think that's good in general, whether you're bullish or bearish, quite frankly. But that's what I'm seeing today, Mark.
Yeah, I think there's a lot to unpack there before we even get to the Rock Lobster and all that Facebook stuff, because I think it seems like a lot of this was triggered by the catalyst with I'm blanking on the name of that data firm, but it was triggered over that, and we have the FTC coming in this morning and saying that they're going to now be investigating Facebook, which is always not a good thing for these notoriously private tech companies out there. But I think this has kind of just been building for a long time. People have been genuinely growing more and more uneasy with the amount of information that sites like Facebook and others have on people. I think that came to light a lot in the election, and it's kind of people have known this and been unaware of it, or been aware of it, but maybe unsure if they could do something about it or not. It just seems like there's a general uncertainty about a lot of these platforms these days, which is kind of interesting. People are jumping off Snap a lot, I know, these days as well. It seems like there's a big social media backlash these days, which is kind of interesting given the fact that how many people spend their days in entirety out there. The interesting thing about Facebook, though, is they were off 22% at one point today, intraday, from their record high. Not today, intraday, 20%, but 22% at one point today from their record high they set back. What was it, last month out there? So they were technically really in a bear market at that point. They were off as about a 20% drop is usually defined as a bear market. So Facebook was literally in a bear market. They're also down for the year. They opened the year 177.69 on the second there, so they're well shy of that. Even today, they managed to erase a lot of the blood that was out there in the water today. They got as low as 149 intraday, closing the day right around 160, actually up on the day. So a huge swing, 11-handle swing in Facebook today. Talk about just a huge turnaround. People obviously deciding this maybe recent drubbing has been overblown. Of course, didn't help. You have the CEO of Apple coming out and others saying, yeah, I think we need some regulation in this space. So all of people starting to pile on, even from the tech world, maybe building up releasing a little bit of pent-up animosity towards Facebook. All of this kind of coming at them at once. So that was, of course, probably one of the main reasons why the stock hit as low as it did today. From an options perspective, it was just lighting it up today. The stock is averaging of late 340,000 contracts. So it's already a very active name. Today doing about 1.2, almost 1.3 million contracts. And again, reflecting that bounce today, it was pretty even, about 1.2 to 1 calls over puts. So there wasn't any huge bias one way or the other in the paper flow out there. So this has been, for a while there, it seemed like you may have to defang the fangs, take the F out of the fangs, just go ang. It doesn't really sound as cool because Facebook was kind of losing its luster. Maybe today will be, it can come back in and play with the rest of the fun. We'll see. Mr. Rocklauser, speaking of playing, I'm sure your hardcores over there in the Pitland were having some fun playing with Facebook today, as well as all things VIX and VXX. What was catching your eye in today's activity, sir?
Multiple things. I'll stay on Facebook for 1 second. So Mark had a good comment. He thinks the whole Facebook thing is like Equifax. Remember, they had that big data drop and the stock dropped and everybody was all upset. And, and when it came down to it, it's just somebody screwed up. But By the way, Cambridge Analytics was the
That's
was
I
the
knew it was
firm.
something analytics. Yes.
So the whole data question. I still find like Tusa said. So you go in, you log on to Facebook. About 5,000 people can see what you do anyway on a daily basis, and then you're mad they're selling your what data do you have in there? I got a kid. I got 3 kids. I live in Maine. I like lobsters, and I don't know what. I mean, I don't know what kind of other data they collect because I don't really put any top secret stuff in there. So, I do like the pushback on. From other tech knowledge about, I know these social media firms are getting too big. I think just mainstream media has been so happy with online, with social media, and now maybe they're getting a little bit upset, like they got betrayed, like kind of Hollywood with the Me Too thing. I don't know. There might be a little politics in there, but Facebook down to 150 and the move back up was pretty spectacular. I think Mark even had a street piece buying some calls. If it wasn't the bottom, it was pretty close. So, but Facebook is kind of here today to stay. I think social media is here to stay. Maybe it might make Twitter more interesting. I don't know. Still 10-to-1 market cap, at least between those two, if not more still. So it might make other what we'll call, Facebook, I think now is getting kind of the role of the bad big guy in social media, and Twitter's the little upstart, it's the nice little social media company, I guess. So there might be a little bit of dollars moving from one to the other at this point. That's a possibility of a trade. And I own a little Twitter too, so I'm not. I'm talking but I own Facebook too. So, but either way, I don't think Facebook's really going to go away anytime soon. I think the whole social media thing will probably blow over. So we'll see what as it goes out. But yes, will it still be volatile in the short term? Absolutely, it will be volatile. So there's good opportunities. I mean, you can sell long-term puts at the 125s in January, or out there in the middle of summertime, you can sell 125 puts for real money, stuff like that now. So, which is something you don't normally can do. So there might be some opportunity for stuff like that in there. As far as VIX goes, what do we have? Almost a 3% move today. I was trying to. It keeps going up as you look at it, so it's hard for it to stop. But again, that's volatility, realized vol in the 50s almost, very close to it, if not there. Hard for VIX to go down anymore. And I think from a vol point of view, we keep getting to this point where VIX. He wants to drop to the 15. I think it was 15 last week. Just, it's 1% per day. And that's kind of feels like the low tick for volatility for the foreseeable future. And then all of a sudden everybody gets worried and things blow up again. So I think overall the swings for volatility want to be much bigger than they have, especially over last year. I don't think that's going to go away anytime soon because I think the volatility out of, or the potential policy volatility, I think, is causing that to happen. And the VIX cash is still very backward to the future. I mean, it's $2-3 over the future. So, and what generally that means is the market is still, they're kind of throwing up their hands like, I don't know what's going on with anything. Although they do think the vol futures are pricing volatility lower into mid-April. So if you, I think what I'm putting on a little bit is like the gutsy vol trend, if you want, is there is going to be some vol movement, but I think as we go into those big tech earnings, you see the moves in them. Microsoft got upgraded, I guess, is the next $1 trillion company by somebody. The earnings growth in big tech, I don't think is going to go away. As Tusa said with interest rates, I don't think any of that's going away. I've been kind of a Q bull for a while, and I haven't stopped being one. But there's always fits and starts. So I think if anything crushes the vol, I mean, you're looking at that last week of April for the big tech earnings. I think that would be what I would call the next aiming point for volatility. While we have fits and starts in the meantime, because that ultimately has what's been trying to driving the market up, just, growth, earnings growth. And if we still have it, then you see you're going to see lower vol and, higher stock prices again. And this will all look like just something in the rearview mirror where, oh my God, I had a chance to buy 2,500 SPX again. I didn't do it. So again, we could have another tweet or whatever, but we'll see. But the market is still, as far as from a vol market point of view, they're not giving up on the fact that we have volatility anywhere, shape, or form. And VIX can't go down when the market's up 3%. It can't go down very much because how it's like you're a liquidity provider. You're going to sell a straddle for $30 and it goes to $75. You're not doing that.
But the upside doesn't count, Mr. Rocklops. I don't know if you know that. The upside doesn't count. It's all downside.
Exactly. Everybody forgets, I just sold this straddle at $50. Now it's 80. So people have to realize that, volatility cuts both ways. So although VIX, the way it is built to decrease in value as the SPX goes up. So I don't know how, I don't think volatility, per strike actually went down at all today. I've got to look at the end of the day, but I don't think it went down at all. If anything, it probably went up a little bit. So I know that's a strange concept, but it's just we're moving way too much. It might have dropped from a little bit from the crazy, the very high level we had Friday, but still 25 vol is not much when you move 3%. When you move what? 4% or 5% in 2 days and then 3% up the next day. I mean, it's hard for vol. It's hard for vol to go down too much.
That is some actual realized volatility in the marketplace there, which is,
it is.
I'm looking here. This is the biggest up move since I think August 26th of 2015 is the data point for all you wondering out there. Speaking of data points, I know we got to get onto the odd block, but all you guys out there, I know a lot of you trade a lot of Tesla, sell a lot of puts out in Tesla. I know a lot of you like that 300 strike. And I know a lot of you are probably sweating today because Tesla got oh, by the way, speaking of puts, before I get off Facebook really quick, I'm looking here, Mr. Rocklops. It shows you how dire things were at one point in Facebook today. I'm looking at the weekly April puts, 150 puts expiring on the 6th, so 11 days from now. They got up to $6 today. That's how crazy things were out there in Facebook land today. Those are actually $1 in the money. So, that's just madness. Speaking of madness, Tesla was broke through aggressively the 300 strike. Think how crazy that sounds. Just a week and change ago on the show, we were talking about how safe everyone felt given this fact that the stock was right around, on 3.5, close to it out there. So it seemed like that 300 handle was a distant memory. Not today. The stock taking it on the chin, getting as low as 291 out there in the marketplace before closing the day. North of 300 again, 304.15. So actually got as high as 307. 16 and change handle range in Tesla today. So there's a little bit of vol out there as well. At one point it was off 15%, not to intraday, but just in the last 19 days. This name has been taking it on the chin. Big, very bearish piece coming out of it was Forbes or Fortune today, one of those two, pretty much talking about how, like I've said before on the show, it was a huge mistake when Tesla issued those bonds and how they should have done convertibles like they did back in the day. Of course, convertibles would dilute the shareholder price, which they were leery to do, but now doing straight up debt those guys don't play around. We said that on the show before. You miss your numbers, they come to take things. So this piece, I think, ended with, and again, bearish pieces on Tesla are a dime a dozen these days, but still, this piece ended with this guy says they don't raise at least $2 billion to fund his obligations by the next 12 months. He thinks we'll go out of business. So there you go. So kind of dire stuff for Tesla coming out today. So I know a lot of you were probably grinning and bearing. I think we have a listener question about this a little bit later anyway. Kind of grinning and bearing it, hoping it would do what it always does, which is get close to that level and bounce off, and that's exactly what it did. So all of you who were sweating at one point with those 300 puts were $8-9 in the money are looking a little better now. That's not always the best way to manage your risk. Just ask the Rock Lobster. But still, you guys, it worked out for you yet again. So maybe it's not a good thing. Maybe people don't learn if they don't get if it doesn't close under 300 one of these days. But still, I guess you survived the margin call for another day while we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wonderful, the whimsical, the head-scratching paper that was lighting it up out here today. We always start, as we are wont to do, very appropriate today, in the realm of Tesla catastrophe puts. If these things are CDS linked, like a lot of people have speculated, including us here on the show, then clearly someone was trading it up out there in the CDS market today, which may be not surprising given the looming fears of default on Tesla on some of their debt, because these Jan 2019 50 puts were trading for size today. 1,152 of these garbage catastrophe puts lighting it up. These things pushing $1. Let's see how high they got today intraday. They closed 93 at night. Got as high as $1.20 intraday for these pretty much worthless puts. Well, not worthless, $1.20, but in all but name, worthless. A total of just shy of 37,000 open on this strike now, 36,900 to be precise. We also talked on a recent show about how the 2020 100 puts were lighting it up, or actually was it 70? I forgot. There were a lot of strikes out there that were very active, but the 2020 puts were really doing it out there today. 161 of the 50s, not over almost 10,000 open there, and 100 of the pars in Jan 2020 for 5,300 there. There was another, what was the strike we had last time? It was the 80s, I believe, because there's 4,300 of the Jan 2019 80 puts, and there's 4,300 open. Yes, they traded last week about 3,900 times last week. So someone has apparently been trading it up for size out there in the CDS market. I don't know, Mr. Rock Lobster, does that surprise you at all that on a day when there's concerns about Tesla going bankrupt in the next 12 months that we'd see some size far out of the money put activity, perhaps CDS linked?
It does not surprise me, because I think somebody's been waiting for this for a long time. The problem is you could go broke buying puts in Tesla. And, you know, the guy's got to raise $2 billion. I'm sure he'll be able to raise another $2 billion. He might, you know, he's too much a part of the green machine not to raise the money he needs. So I think he will probably do it. But again, I have to say it'll be another dilution. I guess, you know, dilutions never matter to any of his holders. That's for sure. My gosh. He seems like he always gets away with it, but it's not going to surprise me that one, he has to raise money, and he's got some production problems with the Model 3. So again, I still think he's a magical guy that does all kinds of cool stuff. And if anybody can raise the money, he can, but I think they, I really, at this point, they need Apple to buy them. He needs somebody with some big cash to see it through. But I think Apple would buy the pieces of the company after it went, you know, after it had some problems. They would go and buy the assets and stuff. So I would guess they would wait, but you know, that would be pure speculation. But yeah, I could see how they would be interested in all of that stuff, but I don't think they're going to pay. You know, even right now, what is the market cap of Tesla? Is it $75 billion?
Somewhere close to 50, I think. Even when the recent, let me look at the 51 pretty much after today's big
51 billion.
Yeah.
I mean, what is that? That's a quarter's worth of Apple's profits.
Yeah, Apple has the cash, but none of the other, like, you think a big automaker might want them, but they don't have the cash to throw that around.
Yeah, no, they would just. I think they would do a take under of Tesla. You know, they'd say, okay, we're going to get you out all your problems for $200 a share, and you know, for developing all the technology, it's probably worth that much. Because they're so, you know, look at all the things that they do. They're trying to be on the front of so many, you know, automated driving and batteries and all this kind of stuff. And, you know, that takes cash flow. I don't and clearly all the automakers are just circling and waiting, I think, because, you know, it's hard to, doesn't seem like they have an original thought in their minds. So, that's what happens with like the old school technology. They end up buying what they want if the company doesn't make it, even though the ideas are pretty good. So, I would not surprise me if that happened with Tesla, but there will be a scare, but it hasn't really. It hasn't manifested itself yet. That's for sure. I mean, it is what it is on that case. It just does not. It is not. It doesn't go away, and he always manages a way to raise $2 billion. And I think that kind of money will still be available to him.
When the stock's $300, even selling off a lot, there's still a lot of room for dilution. You can still look pretty good.
Yep.
So you dilute it down to 250. Oh no, you're still in operation. Your company's still worth what, $40-odd billion. So yeah, there are definitely worse things, perhaps, certainly than going out of business. But yeah, speaking of going from a company that has about a $50 billion market cap to a little bit smaller, we're talking about 18, almost 19 billion. We're going over to MGM Resorts International, ticker symbol MGM. Very appropriate. You know how I love those appropriate tickers. Closing today right around $35, $34.92. Swinging all over the place. End of the day up 5%. So beating the street to the upside there today out in MGM. It's a name that does about 21,000 contracts a day. So pretty good paper out here, doing 82,000 today. So a lot of paper going up out there today. Of that, about 63,000 going up in, I guess, what you can call a funky call, stupid. Kind of pick your poison. Probably more of like maybe a split striker here because it's so close. They're one handle away. It was the May 37s and the May 36s both going up on spreads here. 29,993 times for the 37s on 87 cents, pretty much on the offer, and 29,767 of the 36s for $1.17, also pretty much right near the offer there. So clearly lifting on both of those. OI non-existent on both strikes, and it's a handle difference. So maybe someone out there really, really wanted to have the effectively de facto 36 half strike. And that's kind of what they ended up perhaps creating. My feelings on stupids. This one is perhaps understandable. I don't know. I'm not a fan of these initial outlay. We'll let Mr. Lobster weigh in on this in a second. First, let's look here on how things have been at MGM. It has been quite the Cinderella story out here, dramatically upward, starting the year about $26 and change, and then slowly kind of rallying, getting as high as 38 back in end of January. And then kind of trailing off a little bit again, dripping back down to about $32 before bouncing around to where it is right around now, right around $35 after today's move, certainly helping with that. So it's kind of been a topsy-turvy story out here in MGM, but mostly to the upside with a little bit of volatility. Mr. Rock Lobster, perhaps we'll start our discussions on stupids are widely known and well documented. We need not investigate them fully again today, but I'm curious your thoughts on perhaps this particular use of the stupid. You come into MGM, you look at it and say, I really would like a half strike here. So I'm kind of just going to make one. Is that a use case you encourage as a risk manager at Carmen Line?
You know what I just thought about? If nowhere is stupid more smartly talked about than on the Option Insider Radio Network.
We've done in-depth. We should have a whole special on the stupids and just pull all of our debates. It'd be many hours of stupid debate.
It would probably be the only channel on social media that actually says we do stupid better than anybody, as opposed to everybody else.
That could be our first that could be our first
Nobody
premium
could
show.
Deny that whatsoever. I'm totally down for that.
I like it. First premium show on the network, getting stupid with the Options Insider. Just who wouldn't pay for that?
Exactly. Who do you want to get stupid with? Okay, so this is what I like. I think the best answer was just yours. I don't like that there's no 36 and a halves, so I'm just going to make one. But I'm going to make one 30,000 times.
Yeah, he put his stamp on it, that's for sure. He didn't do a 10 lot.
No, he's like, I want to, and you know what it is too, is I think this is a like a quasi play on on China. A lot of Wynn and MGM and all these casinos. They got Macau and whatever, and Chinese gaming and all that. That's a big part. I mean, of what's going on with those companies and tariffs and everybody's. Oh, they're going to slam. What are they going to shut down the gambling resorts in Macau or whatever? So that I think was a fear. I think it's a smart kind of China play that this whole tariff thing is going to be a bunch of crap, and they'll come to some sort of agreement maybe here, maybe faster than normal, or not. But it was a $38 stock, so it looks like they're poised to make a little dough right there. So it would be very interesting to see how this one plays out. But it does feel like I want to be long. I want to be really long fast.
It does.
But, they use the May cycle, so they're giving themselves a little time to make some dough. So they got a little bit of decay problem, but not as bad as it could be.
Here you go. Here's a new move for the Carmen Line Capital. Get out there and just make your own split strikes. Why wait for the industry to catch up with you? Just make strikes where you want them, effectively. Moving on from, we had 50 billion market cap, then down to about 18, 19 billion for MGM. Let's see where our next one falls in. Also pretty decent, about 20, almost 21 billion. So getting some rich names on the old odd block today. For our old friend Newmont Mining Corp, ticker symbol NEM, N-E-M, closing today about 39, almost $40, up nearly 3% or a buck and change out there. This name it does, again, about 12,000 contracts a day. So another pretty active name for the odd block. We usually talk about names that do about 200 contracts a day. Today doing 60,000 contracts, 8-to-1 calls over puts. A lot of that call activity coming longer term. Somebody really wanted to get themselves some long-term Jan upside here in NEM, coming in and scooping up to start off about 8,400 of the Jan 45s expiring this coming up January, so 2019, doing it 8,400 times and change. Prices were about right near the 275, so a penny or two off of the offer there, 8,000 times and change. Then worth noting, open interest there is about 14,000. And then it is also worth noting a little bit later, we saw about 4,200 of the Jan 2020 45s also going up today on open interest of 1,100, which they didn't go up simultaneously. It wasn't a spread, so that's why it didn't come up in our first scan up here. But still, it is interesting, shall we say, coincidental. We don't believe in coincidences here on the old odd block, that someone would fall in love with both strikes like that, doing it almost on a 1-by-2 ratio. And the fact that there's size OI in 2019, it is potentially possible that they are rolling from the 45s out to Jan 2020. I'm not sure the timing on that would be certainly bizarre, which is why I'm going to assume that maybe this is a little bit of new additive paper out here. Let's look up the chart in our old friend NEM, see how it's been doing. Of course, kicked off the year right around the low 30s, 32, 33. Then it kind of rallied up to about 42 back again the end of January. Then it's kind of been vacillating around, dipped back down to 36, back up to pretty much where it is right now, pushing 40 again. So it's kind of on a little bit of the near-term, couple-week upside here trend in NEM. Mr. Rock Lobster, what do you think is going on here with these 2019 and then 2020 45s? The ratios are interesting. Lines up kind of 2-by-1. The OI on one strike, not on the other. But this would be a head-scratching time to want to roll your 2019 45 calls, would it not?
I think it is a little head-scratching. What would make you want to do that? I guess, I'm the only thing I'm thinking is just because they're trying to catch the rally. It's not in the basement. It's a little higher price. Maybe they picked up some decent decay on their 2019s already. And, from a yield point of view, that's not a bad yield. If you sell the 45s for $5, even though that's 2020, it's hard to believe we're thinking about that already. But it doesn't look unreasonable that they're doing that. So I find that an interesting role. Another way too is it could be a change the leverage play a little bit. So they're reducing the number of calls they're short, but they're keeping roughly the same premium, and maybe trying to add a little more upside. Maybe, you know what I mean? Just doing a slight leveraged roll is what I would say on this one. So they're trying to deleverage and get a little bit longer where we are right here, but trying to keep the net premium that they've sold around the same. So in that way, I don't think it would be a terrible idea, not a terrible play. So, but what's interesting is that to me would be a little more bullish gold if they're trying to take off some of those short calls. So the gold bugs are still there. That'll make Mr. Tusaw happy.
That would. He's got smiles all over the place today. He's just enjoying life as our resident bull in residence. Resident bull in residence. I like that. Put that on your business card. A little bit redundant, but that always just it emphasizes the point over there. Let's come up here on our final one. Market cap wise, we went from 50 billion to 20 to 18. Now we got 425 million. So we're dropping down a little bit. This is more odd block territory for us. Going to finishing things up appropriately enough with Finish Line Inc. Ticker symbol FINL, FINL, closing today, $13.83. Just shot out of a cannon, up 31% today, about 3.25. I don't know what the news is on this one. Of takeover, I don't think it's earnings. Yeah, the earnings aren't until the 3rd. So something is afoot out here with Finish Line. They operate a bunch of athletic apparel stores under that Finish Line brand. It's the name that usually does about 1,600 contracts a day. Today, doing about 31,000. 12-1 roughly calls over puts, about 28,500 calls and about 2,500 puts. What caught our eye? It's kind of interesting. This kind of stuff always is interesting. Almost more from an execution standpoint out there. The April 12s were the trade du jour. Today, everyone and their mother pretty much had to have them, including, about total of about 24, almost 25,000 of these ended up trading today. So everyone had to have some of these April 12s out here today. What caught our eye was an interesting execution. You can tell, you just love the sweeps coming through here and to see how they put up. We saw a sweep going up earlier today, about 3,000 contracts, 7 shy of 3,000. Doing it for $1.70. They may have ended up. Actually, they went out $1.75 at $2, so that isn't too bad after all. Just blasting away on the bid there, which shows how far they had to go to get size. And of this 3,000 contracts, it consisted of 86 trades on 15 exchanges out there. So I thought was kind of fascinating to get the total of 2,993 contracts for $1.70 that they wanted to do. They got 88 over on Amex. They got some 5 lot on Arca, 25 on Pearl, 25 on Bats Edge X, C2 on the Cboe gave them 10, all over the place to add it all up to about 3,000 contracts over there, which is kind of fascinating to me, Mr. Rock Lobster. Kind of just maybe I'm just a wonk for this kind of stuff, but I kind of like the execution side of the space. Again, a total of about 24,000 of these trading all over the place today. Here, let's look at, I don't know what the news is, but over the past year, this thing's kind of been all over. Got as high as, started the year about $12, $13, so not that far from where it is right now. And it's kind of vacillated all over. Got as low as $6.90 back on the 29th of August last year. Then on earnings, seemed like they kind of rallied a bit. Then they got up to nearly $15 back in, they kicked the year off actually, right at about $15. And they kind of slowly have been selling off. We got down to $10 again, and then all of a sudden rally ho mode. So I don't know, Mr. Rock Lobster, if you follow this name, if you know what the heck was driving it up today. And then B, just kind of the interesting execution on these calls. And it just shows how far afield you have to go sometime to get all the size on that bid. That bid that's displayed by your broker or the guy you're talking to on the phone, maybe in this case, is not just in one spot. It's everywhere.
It's, it's funny. I think it feels like they bought all the calls at the top. The stock's up $3. I'm trying to look if there's any news on it. It looks like kind of earnings, like the volatility's down 50 points. So there's no vol left. So it's a very odd thing. I'm going to guess it may be some sort of takeover.
Oh, yeah. They're going to be acquired by JD Sports for $13.50. Yeah, you see a move like this, it's got to be a takeover, right?
Yeah. And I guess somebody just tried to front run the news like crazy. Because they paid $1.70, but what's the risk arb there? If it's $13.50 takeout, they're paying $1.70 for the 12 calls. I guess they're waiting for another bid to pop in.
I guess they were crushing bids, so they could have had them in their back pocket, and they were just getting out of them, at or near the top, which wasn't a bad level. Got up to about $2, I think, on those calls.
Okay, so I'm looking at it. Maybe what? So they sold them all. It was kind of a little. Maybe just somebody wanted to get out, like a stockholder, and just wanted to get out because it looked like there was a bit of a kind of that cage match volume where, like somebody wanted to unload trade these. I'm just looking at the time and sales now. So I don't think they were an opening. It doesn't feel like an opening buyer. I think an opening seller to get out kind of near the top. But that's kind of it. It's almost like they just had a level and they want to get out and the market switched around and they eventually got filled. That's kind of the way it looks. But other than that, I don't see if with $13.50 for a takeover, I don't see why you're paying $1.70 for those, the 12. So
yeah, I don't know who the poor buyer was on those, but they found bids. That's why they had to go to all 15 exchanges to get filled. But they found people paying $1.70 for those. So go figure, 20 cents above the takeover. I guess there's 20 cents worth of fluff in that, perhaps 20 cents worth of uncertainty that the deal is going to happen. I don't know. Or maybe other players are lurking. You never know in the volatile world of children's shoes, who's going to come in to scoop that bad boy up. But yeah, that one, the pricing was a little odd. But again, it's all the devil is in the details, and the execution of this one kind of just caught my eye even more than the size, even though the size was pretty impressive as well. Speaking of impressive, you guys have been very impressive in our broker madness. Let's get to it with a little bit of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block portion of the show where you guys get to take the reins. We've been telling you about and you guys have been playing along in our big broker madness fun out here, and oh, the fun that it has been having. Just been battle after battle after battle. We got two more on the docket right now to help us determine our final four. But first, let me catch you up on where we are here in the battles so far. Last week, we had some interesting face-offs. We had kind of, I guess you can call them sibling, spin-off, call them what you will platforms, kind of the legacy TD Ameritrade / Toss versus their newer spin-off rival upstart Tastyworks going at it, and Tastyworks taking it to them in terms of voting. So they're moving on to the final four. And we also had last year's winner, excuse me, Lightspeed taking on the E-Trade / Options House platform, and they took it to them as well. So Lightspeed and Tastyworks, maybe they're destined for a collision course. We shall see. Our players this week may have something to say about that. We got two more matchups going head-to-head to determine our final four. Remember, listeners, we started with 16 brokers. We pitted them all against each other in a brutal death match. Only one can survive. There can be only one, and it will be, depending on our matchups today, will be the outcome of these. So we've got going up now, right now, for second part of our round two. We have TradeStation taking on Interactive Brokers, and we have Ally Invest, formerly known as TradeKing, our winner from 2 years ago, versus newcomer, quite literal newcomer to the option space, because they haven't really even fully rolled out their options functionality yet. It's still pretty much in beta. It's still an early release. You have to request it. But a lot of you requested us to include it. So we did in the nomination process, and so far, at least, it seems to be merited because you guys keep propping them up. So we have Robinhood facing off with the former TradeKing, now Ally Invest. I don't know. You guys want to guess right now, Let's start with Uncle Mike. Who do you think is winning in TradeStation versus Interactive Brokers, and then Ally versus Robinhood?
Well, I think that TradeStation's probably beaten Interactive Brokers at this point. I know that it's a lot of, at least my clients anyway, talk about sometimes they have other accounts with TradeStation and they use them fairly actively. So I think TradeStation would definitely be ahead of Interactive Brokers, at least with our audience. And then with Allied, I think I'm going to, or the other matchup, I think I'm going to go with Allied. Let's have faith in Brian Ogilvy, our buddy. See if he can pull things off for him.
Yes, he of Options Playbook Radio fame has been on this show a couple of times as well. We shall see. Mr. Rock Lobster, you putting any money in our pools this year? You got any winners you're betting on here in terms of this week's matchups? TradeStation versus Interactive Brokers and Ally/TradeKing versus Robinhood.
I like this. Robinhood is intriguing. Isn't this the free website? You trade for free or you invest for free or something?
It's kind of like the millennial stock thing. You buy $50 worth of a stock whenever you got $50 put aside. Now they're starting ostensibly going to add options. It's interesting because they reached out to us ready to talk about options, and then they dialed it all back. So I don't know what that means if they're delaying or not, but people are still excited about it apparently.
Well, I think they need to figure out how to make some money because it's pretty hard to do this business without charging anything. But maybe it works out. I mean, they certainly have, so they're growing. I don't know about like as a customer service platform how great that would be. But I like the idea as far as so TradeKing, people seem to like TradeKing as well. So you know what I'm gonna do? I'm gonna go with the free over TradeKing and see how that would pull out. Also, IB, I know people like IB for certain things, but customer service is not one, and I know people seem to like the TradeStation customer service better. So I would say TradeStation over IB, and I'm gonna go with the millennial free thing over TradeKing.
The millennial free thing. Yeah, this context does kind of exploit a weakness that IB has, which is customer goodwill and their customer facing part of their business is kind of where they fall down a little bit, and that's kind of what this contest is all about. So that could be their Achilles heel, maybe why they haven't placed so highly in recent years, but we shall see. It's still early days for the voting. We still have about a day and change left in both of these battles, but interestingly enough, as I look at the numbers right now here during showtime, they're both exact dead heats, 50% each for TradeStation and IB, and 50% each for Ally and Robinhood. So our audience is evenly split,
wow.
which is crazy cakes. Again, they kind of just went live, so it's early voting. I'm sure these numbers will change, but still, surprising results here. So all you who question whether Robinhood should even be in here, you guys wanted it, and clearly you're voting for it. So I guess the Robinhood fanatics are there. People are already chiming in. This is a Robinhood fanatic here, F Contango Trader. He says he put in 5 more votes for Robinhood today. He said it's Chicago-style voting, which we encourage in this, actually. It's a Chicago-style contest. Vote early, vote often. So go ahead. He's actually playing by the rules. Vote as many times as you want for the broker you like, or vote against the broker you don't like him as many times as you want. Obviously, you got to use different accounts, different things, email, Facebook, Twitter, all that fun stuff. And make sure you like and retweet and share, because every time you do that, you get entered to win our drawing for fabulous prizes. So do so. The more times you like, share, retweet, do all that stuff, the more entries you get in the contest. It's free. Maybe you win stuff. You have fun. You tell your brokers what you think about them. Oh, we got some love for IB coming here. Mark Brandt chiming in said, IB for the win. Petterfee started it all. So there you go. People weighing in with their thoughts and questions and concerns. This is going to be a fun one. And I am looking forward to the Final Four, because we already know Lightspeed could bring it. They won last year. Tasty Trade this year in the early running is doing pretty well. We'll see if Robinhood or some of these others can bring it. I think our Final Four matchups are going to be very fun, and then the Ultimate Showdown will be very fun to watch. So again, the polls are over there at Options on Twitter, but you can vote pretty much anywhere that you engage with us. So if you want to send us an email, questions@theoptionsinsider.com, you can do that. You can use our website feedback form. Many of you are doing that. You can use Facebook. You can use StockTwits. You can use all of the above. You want to send a carrier pigeon to our studio here in Chicago, you can do that. All those votes will be entered. They will all be tallied to determine the winner. And more importantly, they'll also be used for you to determine who wins the fabulous prizes. All right. Good stuff. Looking forward to seeing the outcome of this one. This should be a fun one. Meanwhile, though, we got to keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, this portion of the show, we tell you what we're peering at into the future. Uncle Mike, this time last week, or actually last show we did with you, it was all about trade war. Will it, won't it, will it continue? Apparently it won't. That's the consensus of the market, or at the very least it won't have the impact some thought, because we're looking at some size bullish activity. So with all this stuff in the rearview mirror, what the heck are you looking at, sir?
I don't know. I think everything's just going to always go up constantly now forever. No, I want to see if we can get some continuation, not just tomorrow, but over the next few days. We've had quite a pullback going into this 70-point day, so need to see if we can have some continuation for it. Of course, wanting to see how the rest of tech will react to how things are going on with Facebook. And that, I would say, is pretty much it, with the exception, of course, of just watching the president's Twitter account to see what happens next.
And Mr. Rock Lobster, same question for you, sir, because it's all, everything's good in the world now. I'm not sure if you heard. So what are you watching?
Our earnings are, 2 weeks away. I think if you make a short vol bet, you got to kind of look at that time frame. You could maybe swing it around a little bit short term to see. And I like to see if we actually get the curve starts to upend. What I haven't seen either is we haven't actually seen this high vol contango. So that's when the market kind of accepts that longer term higher vol is here for a while. Haven't seen that yet. So from a vol point of view, we're looking at, I think we're going to earnings, and I think you also had an opportunity to buy earnings premium and time spread the crap out of it with all the short-term vol we had to own some earnings juice for reduced dollars. So I think those are two opportunities that are out there. If you understand what the heck I'm saying, you've got to trade or some ways to invest to kind of ride this tech rally. If you don't, you don't. But we were looking at that exact stuff last week at Option Pit. So it obviously it has done okay this week. You don't expect a 2.2 3/4% move, but what the heck? If you got it, you got it.
If you got it, you got it. If you got it, flaunt it too, sir. So go for it. And, they got it over there on the Option Pit Vol newsletter. Check it out, optionpit.com. You can hear all this good stuff about contango and backwardation and maybe some VXX erosion and all the other good stuff, SVXY, all the other fun stuff you guys like to talk about in the vol space. Mr. Rock Lobster does that, I think, pretty much every day in his vol newsletter, at the very least once a week. He'll check out optionpit.com, go to the vol newsletter tab, and that will tell you the frequency there. So check it out for yourself. On behalf of myself and Uncle Mike, who, of course, he loves pretty much all things. Well, before we even do that, really quickly, Mr. Uncle Mike, people want to hear about what you're doing, or maybe because today is a good day to go long. Maybe they want to pick up your book. Where should they go? What should they do?
Oh, by all means, give me a call, 312-212-3531. Book is also available on Amazon Kindle. Just type in keywords "go long." And if you have any other questions, you can also feel free to email me at mtosaw@rcmfs.com.
Yeah, you kind of missed the boat today if you didn't have the Go Long book. But you buy it, put it in your back pocket for next time the market's up 3+%. And then you too can think Uncle Mike is a genius. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, asking questions, voting in our polls, all the other fun stuff that you guys do. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.